YouTube? Welcome back to the Wolf Catchers channel. Definitely happy you guys are able to stop by and tap in. I'm going to be doing something a little bit different today. So we have reached around that time of the month where I will start writing and preparing my monthly watch list. So today is the last trading day of the month. Obviously, next week begins the new trading month for February. So usually every first of the month I write out my watch list, about recapping about what happened in the past month, what we're looking forward to for the next month coming up, and also some entry price points and things of that nature for stocks and ETFs that's on the watch list. So I thought it'd be pretty cool to make a little video to show about what I look at, how I view um, charting and looking at stocks and names I'm interested in and things that are on the watch list. And this isn't an in-depth technical analysis video. I don't do the whole supply demand zones and trend lines, bull, bear flags, inverse head and shoulders, things of that nature. I'm pretty simple. I have it for each watch list and each monthly thing I put out on my website. I have it strictly there what I do. I'll look at my SMAs. I'm big on MACD and RSI. That's pretty much all I look at for my entry points and things like that. And also, just to be very transparent, I'm not no option trader. I'm not a swing trader. I'm not a day trader. None of those things. I'm pretty much focused on long-term investing and for managing accounts and all that stuff. The only account I really care about managing is my personal investment accounts, like retirement accounts of that nature, and also I'm super big about my son's custodial account. So outside of that, that's pretty much what I do. You're not gonna see me screenshotting or things of this nature about, oh, I made $10,000 on a trade and stuff. No, I don't. If you're looking for that type of content, trust me, there's a ton of that on YouTube and other places. I don't do that. Strictly, this is why I post here for educational purposes and for informational purposes. I'm not a financial advisor. I'm not trying to, um, how can I say? I'm not trying to lure you in to be like, hey, follow me, do as I do, this stuff like that. No, I'm just showing you how I view the market, how I look at charts and things of that nature. So that's how I usually look at it. This thing keeps always bringing up about my battery. I gotta definitely get that checked out. Sorry about that. But get this off the screen. But yeah, so again, gonna go ahead and look into how I go about looking at the market, and most of the stuff here, like 99% of it's gonna be stuff that's on the watch list. So I'm not gonna pick something out that I don't usually look at, that I don't usually follow, things of that nature. If anything does come up in the future that you guys want to look at and want me to go over it, definitely leave that in the comments. Again, you can send me an email at thewolfcatcher@yahoo.com. Also, don't forget you always go to the website, thewolfcatchers.com. Check out the content over there too. And again, like what you see here, give me a like, subscribe, leave a comment, share the video out. Definitely appreciate it. So let's go ahead and tap in. So we're going to start off with our indices first. So obviously we got the SPY up here, S&P 500. What I care about most of the time is daily and weekly charts. Every now and then I will probably look at the monthly, but I don't care about going to lower time frames. 4 hour, 1 hour, all that stuff. I don't do any of that. So I'm going to start off with the SPY. And then obviously here are my SMAs here. My green's my 50, my blue's my 72, red's my 100, purple's my 200. The grayish line here is my 253, and my 400 is the yellow line. Volumes here, I look at it, but I don't really care for it that much. Here's my RSI, and here's my MACD. I have it green and red. Green, if it's in an uptrend, it's going to be above the red. If it falls below the red, it means we're in a downtrend. So I just put those colors just so it's easy to make sense in my brain when I look at it. So now let's dive into it. So yeah, we do have the SPY here. We see that we did end the day on green. We did hit a high this month for 697. That's an all-time high, as we all know. SPY broke $7,000 for the first time. The I should say S&P 500, not SPY, but Broke 7,000 for the first time, so that was very good. Yeah, you can see here the uptrend is still remaining intact. And then we see here we're still above all these moving averages. And we see that when we did fall to the 72, we usually bounce back. And then we saw the 100. We haven't touched that in a long time. So that was back in November when we touched it. And before that was a very long time. And then we never bounced back from that. So if I was, going ahead my regular thing, put my price points out, I usually care about my 100 down to about my 400 as my window of ranges I think is good. So looking at it, maybe 676, I like to round up. So 677 to 608 is a range I would have in terms of a daily range. Okay, this is where I would like to start a position that I enter into that I could be comfortable with. And then obviously with each moving average, you have your tranches, I like to say. So if you have $1,000, you'll probably put 250 here at this point. Next moving average gets hit, probably put your next 250. This one gets hit, maybe 250 as well, right? So find a number that works for you in terms about how you want to scale into a position, right? So you have 1,000, put your 250 here, let it hold there, and if it bounces back up, like it did back here and rides out, cool, you're good. If it continues to fall, hey, yeah, I got it in at a decent price, and now I'm just waiting to fall to the next price that I'm willing to buy more of it at, right? So that's how you scale into it. You don't just load the boat here at the first sign that, hit the 100-day, I'm gonna load the boat. That's not how I approach it. So back here, looking at on the daily, these are all the points for it. So we see 200, 641 is a good price, 627 for the 253, 607 for the 400. Again, my range for that would be $608 to $677 in that range to go ahead and start building positions. You can see here from the RSI is at 53. It gives like a neutral. It's nothing that's close to being overbought or oversold. And then we have our MACD down here, still showing a neutral sign as well. So then next, I'll go ahead and flip over to my weekly. Obviously you can see here, we have more data in here. So now each of these candles represent 1 week worth of data. Again, go back in time. This is back in March 2025, and obviously April, Liberation Day happened. So we can see from here we had this huge sell-off, hit the 100, and then what happened from there? Went on to a run. So obviously if you entered here, which is why I personally like entering more so on a weekly chart, it does take a longer time to wait it out, right, to get those opportunities. But entering on the weekly time frame is much better, especially if it's high quality names, especially if you're entering something broad like the market, right, which is the S&P 500, or entering something like a major index like the QQQ or the Russell 2000. You enter on those type of indices or indexes, what you go ahead and do is put yourself in a better position to succeed long term, because you're looking at a longer time frame, right? And that's going to benefit you even more versus the day-to-day swings on the daily chart. Daily chart's good to get into as well, but if you have the patience, definitely operate off of the weekly. But we can see here on the weekly, for me personally, the range I'll put here would be 594 to 425. That would be the range for it, right? And obviously, these other ranges that we have down here, these SMAs that we have down here, doesn't mean it's going to happen, right? As you can see, the last time we hit a 200-day SMA was way back here in October 2022, right? So obviously, this goes to show you these are very few and far between. This is probably once every couple of years this may happen. But again, that's a generational opportunity. You see this happen, and what happened after that? Been running on like nonstop, right? So that's where you get those opportunities at. That's what you look for. And also just be aware of where you're at in the market during the time. Here, I showed you the information on the daily chart. when you look at the weekly, we're nowhere near a good deal or a good buying opportunity. RSI is almost in overbought territory, so almost touching 70. MACD is way up here. It's curling downwards, showing some, negative momentum showing up eventually. But we're still near all-time highs. This isn't a time you will be scaling in or trying to build a position, right? So let's go ahead and look at our next ETF here. Let me just pull up my list here. So obviously we're gonna go next to the QQQ. And I have a list of companies I want to look at too as well. I just want to bang out these indexes first before I dive into those. I'm not sure about the list of how many I want to do at a time because obviously these videos could get lengthy. And as you've been on my channel long enough, I do have lengthy videos. So we're looking at the QQQ. Let's go back to the daily chart first. See on the daily, here we recently hit the 100 over here. Let me zoom this in a bit. You see on the daily we hit the 100 here recently. And then you see again we're still above all those moving averages, very close to the 50 and 72. You see how they're starting to converge. And now the 100 is going to start converging. Usually when you start getting those conversions of SMAs coming in together, converging, it's kind of letting oh, the range is getting stronger in terms of the range that it's trading in. So you can see from here to here, it's been kind of trading range bound for a while. And that's when all these SMAs start getting in closer and closer. It's just showing that we're trading in a range for a prolonged period of time. But then for QQQ, range here will be $613 to $534 is how I would mark it out to be where I'm comfortable scaling into, right? And then obviously you see here we have those multiple negative day sessions there. We have the RSI, looks like it's going sharply downward. And then same thing, the MACD, it's curling over, but it's not strong. You can see all here, there's no strong momentum in either direction. It's been kind of doing what I just mentioned earlier. It's basically trading in a range or consolidating. Like here's a big consolidation area right here. But for the most part, it's just trading in a range for a while. And the MACD reflects that as well as, and there's no momentum either way. Whereas you can see here, momentum swung strongly to the downside, and then it reflects over here how strong it swung all the way down to the 100-day SMA. So again, you could touch these points as well, these SMAs, without having no strong, sharp sell-offs, strong running up, any of those things of those nature. So you can still get these volatile price swings, or these price touches, I should say, without volatile price swings. So just something to keep in mind. So I'm go ahead and look at the weekly chart for that. So in a week, you can see we're way above all the moving averages, even more so on the weekly chart. Again, this is always going to be here on most charts when you go look at them on a larger time frame. Liberation Day is going to be signaled right here. So pretty much whatever chart you look at, if they were on the stock market at that point, doesn't matter if it's indices, individual company, they most likely have this blip right here in their chart due to Liberation Day. So obviously we can see here, again, we go on a longer time frame, you can see, hey, we're still trading kind of high over here on RSI. It's at 59, but it's better than being up here. So we did have some selling off. So RSI is showing that, hey, we're at 56. It's going to start going into probably 59, I should say. Start heading towards the neutral area. But then MACD shows you the signal is momentum's heading towards the downside, right? So we could probably see some more selling off if this picks up more, right? And then you start seeing these bars get larger and larger like they did back here for Liberation Day. These start ticking up, and then this green line starts separating more from the red. Lets you know that the selling off is picking up, and also momentum behind that is picking up as well. So now let's go to our next indice. That's going to be the Dow Jones. And then this one, I'm going to see, I'm looking at this all in real time, so obviously I don't know how well these charts reacted. We have something happened with like United Healthcare. It's a big component of the Dow Jones. So I want to see how that affected it. So it's here for the Dow Jones again, still above all the moving averages, still in a good area right now. Did have some red to close off the month. For them, their range is 475 to 438. It's a good range to look at to enter in for this and start building a position. Again, I'm not a fan of the Dow Jones. It's a 30 stock component index, and then I just feel like it's very outdated and archaic how they do it. Remember, Dow Jones is price weighted. It's not capital. It's not market cap weighted. So price weighted, depending on the price of the stock. So like something like, let me go off schedule here. UNH is worth $286. Due to that dollar amount, is going to be way more weighted inside the index, just due to its price point on the stock. So for RSI is neutral, and then we do see here on the daily for the MACD is showing some downward momentum, not strong, but still showing some downward momentum on Dow Jones. So let's go ahead and look at the weekly, see what they're showing us there. Weekly, we'll zoom in again, still very high above all moving averages. We have 431 for the 100-day SMA to 337 is what the range will be in terms of building the position out. Anything within those ranges will be probably good for you to start. Again, when you hit a certain SMA, look at you putting your capital, allocating your capital in tranches. If it's 10% each moving average, if it's 20%, 25%, whatever method you want to do, but have a method when you're scaling into positions and buying companies and buying your investments. That's my best way of how I do it. Like I said, for my son, we start his custodial account. Every time we get that money into his account, whether it's from birthdays, tax credit, things of that nature, yeah, we have the dollar amount there, but I don't just go spend the money right away. I wait for my favorite price points for companies that I've been watching, that I have in this portfolio, and that's how I attack it. I'll have a position, and I'll wait a year till it hits where it needs to. Capital could be used elsewhere, but Google, if I don't want to buy it, I'm not going to touch it because it's not favorable for me to touch it yet. So if it's not 10% off, 20% off, it's not at an SMA I like, I'm just going to leave it. I'm going to go buy something else. Amazon, I'm going to go buy, I'll put the money into the whole market. I'll buy the index just to have the capital doing something because it's not a price I want. So you also gotta have some discipline behind on when you're making these choices, right? Excuse me. So again, for the weekly, we're still kind of high up there. We're at 62. Definitely still not overbought, but still up there, right? And then you can see how the inverse of the MACD is showing. It's still showing some upward momentum, but then we see that little curl at the end. That's probably going to, in a couple of days, or maybe a week or two, might signal some downward momentum, right? Especially, again, how we ended off with that red candle right there. But again, this is just to give you insights, not predicting the future, right? So you don't ever want to look at these and be like, this is for sure what's going to happen. It's giving you some insights, give you some plays that potentially could happen, and you want to go ahead and structure yourself and prepare yourself for things that could go down in that direction, right? And then last, we'll look at IWM, which is the Russell 2000. That's our small caps. And again, remember that they've been on a great run, especially over the past year. You can see here, they're way down here back in April. Yeah, it's a liberation day for them as well over here. And then you see the run they've been on since then. Again, well over all the moving averages. Go ahead and zoom in on that. Well over all the moving averages. Then the 100 obviously was key for them right here. If you missed that run up from way back there, you got into here in November. Still had a nice run up for you. Definitely see some selling off these past trading sessions. I would say you could look for another opportunity at the 100. And again, just to remind you all, these SMAs, they move, right? So each day, this price could be 249 right now, and then middle of next week it might say 247 and change. So it is going to move. So when I'm putting those prices, that's what it is at that point in time that I'm looking at the chart. But again, use your own specific thing if you want to use that price point because it's still good for the most part. Like 99% of the time, it'll still be good because the price is going to fluctuate that much, unless obviously the Russell 2000 dropped 15% in a day. Yeah, that daily 100-day SMA is definitely not going to show 248 if it drops 15% in a day. Because remember, each of these candles represent a day. On the weekly, each candle represents a week. And that's what's affecting these moving average prices, right? And if you want something that reacts as soon as price drops, as soon as price moves, that you can look at the EMA, which is an exponential moving average. But I like the SMA because it's more smoothed out and it takes in more data in terms of it has a longer amount of information and time frame valued into it. It doesn't react volatilely or violently to price swings and fluctuations. Again, that 15% drop isn't going to make this drop drastically. Your EMA, it would, but this, yeah, it's gonna move probably a couple dollars for it. But for your IWM, your 100-day SMA showing 248. So again, I'll round up, so 249 to 225 is a good range for it. And the reason why I do round up is I've had times where I've put in my prices, stuff like that. I'm trying to out 248, I'll round down to 248 flat. And then let's say this fell to 248.72, and then someone wouldn't have purchased it because hey, it didn't hit 248, and then it ran up. You basically lost out on probably a potential 10, 15, 20% run, 80% run into the future, right? Because you were worried about a gap of like 70 cents. So I round up for the potential that it does fall past 249 and won't hit 248.14, but let's say it hits that 248.75 and then it runs up 10-15% from there. At least you got your opportunity into the position, right? So again, so I say always look at price too, but follow the moving average because moving average along the way is going to move with the price, right? So 249 to 225. Then we see our RSI neutral showing 50. And then we do have our MACD. Obviously, we have some selling off here. MACD is reflecting that. You see the greens crossing below the red. So then we do have our little bars here showing there's some momentum going towards that. So momentum's to the downside for this right now. So safe to say that there's probably going to be some more selling pressure there. And then we have the weekly chart we're going to look at for that. And then for the weekly, you see here it tells a different story, right? We're weekly showing that, hey, we just hit all-time highs over here. Yeah, we did end the week off red, but we're way above all these moving averages. Where's the prices here? That's 222 to 189 for a good range right there. You see our RSI is pretty much near overbought. It's at 62, but it was right there, basically touching 70 before this little sell-off started this week. Same with the MACD. MACD is showing, hey, we started upper momentum, but we just started curling over a little bit to the downside, right? So that's where we're at for it. And again, that's why you look at the larger time frames to go ahead and get a better idea of what you're walking into and what you're getting yourself into. So that's all our major indexes. Now we're gonna go look into some mega cap names, sorry, that's in tech. We're gonna start off with something that greatly disappointed me this week was Microsoft. Definitely was disappointed in what happened with them. So here's Microsoft. Obviously, as you can tell by the chart, definitely not something pretty to look at. So see way back here, we had our highs way back in the summer of 2025, right? And then from then on, has been pretty good. So you can see here, had this major drawdown starting from October of last year all the way to here. And then this is what I mean again. Because it hits that moving average doesn't mean everything will turn out to your favor. Hit that moving average, it's like, oh dang, I got a good price here. See it bounce back up, hit it again, you probably would have put some more money in right there. Oh, okay, hit it a third time, put some more money in it. Then it fell, went back to it. You're like, I'm straight, I'm fine. Then it hit the next one, the 253. Then you're like, okay, I added some more money. Then out of nowhere, it hits with 400. That's when your last bit of capital should have went into. And then all this right here, like, oh man, it's going beautiful, it's going amazing. Like, I scaled in as best as I could. Then I got up to here, and then all of nowhere, fell off the face of the earth. Fell past even the largest moving average you got on your daily chart. Right there, you probably like, dang, I'm out of capital right here. And all this was because of an earnings report, right? So, earnings, again, depending on how you look at it, stuff like that. This is about analysts come out with their prices, the company reporting how well they did, how much revenue they bought in, um, how our sales looking, and obviously future guidance for the company, for the business, things of that nature. Earnings, if you're a long-term investor, it's straight. You can deal with it all. If you're someone that's a trader and all that, earnings could be legit the death of you because you can have a good earnings report, beat on everything, stock could still sell off. You have a terrible earnings report, do bad on everything imaginable, and your stock goes up. All of it is really about how those numbers look, what environment you're in, and then how you portray and explain that information to the shareholders and to those listening on the earnings call, right? And how they intake that information. So I'll definitely, especially as a long-term investor, don't let earnings reports sway you any type of way. Again, they're good names, quality companies. Believe in your research and what you come across. Again, on the website, thewealthcatchers.com, I do have a section about how to evaluate a company and break down a company, looking at their financials, things of that nature. To know if you're looking into something that's good, something that's quality. Obviously,